Hi there, traders. This is Brad Gilbert with the weekly kickoff. All right, now last week, a bit of a sort of line through it. They had the hurricane, Milton charging through Florida. It was a massive build-up. We've still got the unrest in the Middle East, of course, but the hurricanes did sort of dominate everything, and the markets went pretty quiet. Now, the dollar, well, as far as the news services go, edges higher against major currencies as traders weigh US data. Now, the currencies aren't really going anywhere. It looks like they've gone as far as they want to, right? If you have a look at the, like even the dollar index, sort of starting to drift sideways. Dollar Swiss definitely sideways. Dollar yen sideways with a slight upward tilt. Now, dollar CAD still moving topside. The Bank of Canada is expected to cut by, or it's a line ball decision whether they cut by 0.5%, but it does look like the market is factoring that in. Now, euro sort of was going down, same with sterling, but you can see here they're all starting to drift sideways. And to me, it's this early signs of a shift in the market. Now, what we need is ideally to get everyone back on track and on the same page. We need some economic numbers just to shake the market up and get us back on target. Because if we have a look at the calendar and the interest rate probabilities, there's a lot more normality in the top end of the calendar, interest rate probability sort of table, I should say. Now, what I'm talking about is a lot of these central banks are now coming back to 0.25. They've done their initial blast, okay? They've cut rates, fed by 0.5%. Everyone's in there sort of doing their bits and pieces. Now we've got some normality in the market, and this is a great sign because you don't want the big 0.5 percentage basis point cuts because they create fear, they create shock, volatility, and a little bit tricky, right? So at the moment, we do have the Bank of Canada. Okay, it's as I said, it's a line ball decision whether they cut by 0.5 percentage point or not. So we want to be watching the Canadian numbers quite closely. We got Canadian CPI numbers Tuesday, right? A really good opportunity lining up with the with that probability stuff for the Bank of Canada. Sorry, now just losing my train of thought there. RBA, still no change from these guys, right? They'll be quick to catch up, and that'll be the time to trade Aussie. But right now, we are sort of on the sidelines waiting, and the RBNZ down the bottom here, just like the Bank of Canada, on track for another 0.5 percentage point cut, right? They just cut by half. They're going again, right? That's how quickly that Kiwi economy can just come to a shuddering halt, right? And that's what's going to happen to the Aussie at some stage. The central bank probably losing perspective at the moment, and definitely a lot of respect amongst all the bankers because they are sort of beating the mantra. We're not cutting until inflation comes down. Well, inflation did come down last month. It's a matter of whether it's not far enough. All right, so using those interest rate probabilities, as I said, like you look for the key numbers. Like Monday, okay, you get some Chinese, some Swiss numbers. You get into Tuesday, we've got it's a big week for sterling, I should say, to start things off. We've got payrolls plus employment numbers for the UK. We've got some industrial production numbers there out of the Eurozone. But Tuesday, definitely the Canadian inflation numbers, right? With that interest rate probability for the Bank of Canada on a knife edge, right? 50-50, whether they go by half or not, it's going to move one way or the other, right? And it's the 23rd. So we've got like 9 days until we hear from the Bank of Canada. But today's inflation numbers will go a long way to determining whether it's 0.5% or 0.25, right? Then you come into Wednesday. Once again, sterling. We've got sterling data all week. UK CPI, RPI data. You want to be keeping a close eye on that. I'll be covering a live trading session on the UK CPI numbers, but it's not really until Thursday where we start to see some US numbers. We've got the Aussie employment numbers. Once again, important to see if we start to see some weakness here. The numbers have been strong, like a lot of the countries. It may lean the RBA into some sort of forward guidance as far as when they might be starting to think they're going to cut rates. The final inflation numbers out of the Eurozone Thursday, but I'm more interested in the US numbers, right? The continued jobless claims. We've got retail sales figures there as well, industrial production. So Thursday, definitely a day to be having a look at things. You got I went straight past the ECB. Now the ECB expected to cut by 0.25, hugely factored in, right? So when it's hugely factored in, there's not much to be done. So I'm sorry, if I just scroll back to the top, it was not wise of me to pass over that. So this week, it's 99.42% factored in, right? So that really means it's just going to come down to their statement or press conference where the next big move is. Okay, so Thursday, definitely a big day. Europe, North America. You come into Friday, once again, we're back into good old sterling. It's a great week to be trading cable, and you've got the retail sales figures. But we also have a bunch of Chinese industrial output numbers, etc., housing numbers out of China, important for the Aussie and Kiwi. And then to round off the week, we've got some building housing numbers out of the US. All right, so like just going through that, it should be obvious to you that like the Canadian inflation numbers Tuesday important. Sterling and sterling crosses this week definitely on the firing line. We also have those Kiwi CPI numbers. Once again, may give us a lead into how aggressive the RBNZ is going to go. But inflation's been falling in New Zealand, so I can't see that changing. And that's pretty much it. It's a pretty good week, right? We've got when you take out like the non-farm payrolls and a couple of like chunky US numbers, we get normality in the markets, right? What I mean by that is less volatility around the releases. The markets can start to sort of work nicely, right? We're not just relying on the US numbers this week. We have a range of data that can shape a lot of these symbols. Now, just to the start of the week, okay, we've got a bit of a risk-off profile. Equities down a bit. A US interest rate yield slightly up, definitely up from last week, and definitely up from 2 weeks ago. We do have a risk-off sentiment in the market, so really nice, like normal trading conditions to start the week, right? Equities down, US dollar up, US interest rates up, and nice markets to sort of kick things off. And when I see sort of this setup here on a Monday, I'm like, okay, this is good. Okay, which means, you know, you may be sort of getting into trades earlier in the week than if it wasn't actually lining up. And as I said, Tuesday, definitely want to be keeping an eye on the UK employment numbers, but most importantly, those Canadian CPI numbers, right? Big time. I'll cover more of that tomorrow and into Tuesday. But for now, we've got a pretty good week. So tune up your charts, get everything polished, all your levels. Like a lot of them are just drifting, so they're not looking awesome. If you come back to the daily charts, they look a little bit better. We are coming back to major support levels. And if I just come back to the live market analysis, this will be fully automated very shortly. You can start to see on a long-term perspective, a lot of these instruments, the Euro, Sterling, Aussie, Kiwi, getting to really good levels to be getting in. Dollar yen selling and dollar Swiss sell. Like, you know what? We've had so much noise on the hourly charts that are a bit blown up. And that's what I want. We want some data to line those things back up. But you know what? Where the action is, it's on the daily charts for now. All right, guys, have a good one. All the best. Cheerio.